Andrew, this is Garrett and Brianna and Dennis over at the Benzinga Pre-Market Prep. How you doing this morning?
Good. How are you?
I'm doing fantastic. Thanks for joining us.
Thanks for having me.
I've actually been watching you for a little while. I've seen since you started Keene on the Market, and I'm pretty impressed with what you've been doing over there. Can you explain a little bit more about Keene on the Market and what you're trying to do with this outlet since you've transitioned from the floor trading?
Yeah, basically when I left the trading floor and trading on the floor has basically become insolvent, and I was a market maker, and we had a profit margin was the spread between the bid and the ask in the option market. And this is now, and I say this every single time I have a webinar, the greatest time ever for a retail trader because the liquidity pool is bigger than ever and the option markets are tighter than ever, which is good for a retail trader and bad for a market maker. So when I left the trading floor, I started out as a blog, started doing some content pieces. I wasn't really sure what I wanted to do with my business, and I realized I wanted to reach the most amount of people and help educate and teach them how to trade in the shortest amount of time. I didn't really want to do the one-on-one mentoring just because I couldn't get to as many people as I'd like. So we launched a live trading room about 3 years ago. It was 3 years ago in February. Now we have over 500 subscribers to the trading room, where traders can share ideas with each other. We have the largest paid all-day moderating trading room. We're open for 8 hours of audio throughout the course of the day. I'm on for 2.5 hours myself. We have two other moderators that trade futures, stocks, options, and basically just talk about the market.
Watching you, I've enjoyed watching you, Andrew. Speaking with other people on CNBC whenever they do those the conviction trades where you have to get behind a trade and state your viewpoint. I've always appreciated where you've come from. So with that said, what do you see coming forward in the market right now? If you can explain perhaps maybe your top options that you're liking right now, or if you have a view on the overall market right now and what you think is going to happen with the S&P 500. Do we continue to tick higher?
Yeah, I mean, I've basically been net long the market for 2.5 years. In 2007, 2008 were my best years ever, and I was always short the market. And, I'm under this theory where the market's going to continue to grind higher. I think we're going to take out the highs of 2089 or 2086 in the S&P 500 futures this year, and I think we're going to get through 2100. The stock market in the short term is just a supply-demand curve between buyers and sellers. And, the way that the U.S. stock market works is people look at their 401k, they look at their IRA, and when they have more money in it, they spend more money. So it's just a cyclical effect. With the price of oil dropping, and there's two ways to look at the price of oil dropping. One person can say it's global growth is slowing down, and then another person can say it's good for the consumer because, every $10 in oil decreasing is 1% of GDP. So it looks like oil actually might have bottomed here a little bit, but I think the market's going to continue higher. I don't think it's going to have a big correction at all this year. We saw about a 9.7% correction last year, and then buyers came into the market. So I'll be continuing to add to long positions on pullbacks, but I have been net long the market for about 2.5 years now.
Do you have a favorite play in your book right now? I mean, we were talking about Twitter, Coca-Cola this morning, a few other the major American staples, GE. What do you think overall? I mean, are you looking for some of these more unique plays, maybe something like a retail minute, or do you stick with some more of these big bellwethers? Or do you just chase the value
as
where
I
the
look at my
value
book,
is?
I have a very unique way of trading. There's 8,700 publicly traded companies. Out of those, there's 4,199 with options in them. I watch unusual option activity. So I'm watching for institutional order flow in the option market. Yesterday, I know it hit CNBC. They were talking about a big spread in WNB, Williams Brothers. Traders sold some Feb 45s, I think they were, and rolled them up to the Feb 48. So, I am net on the market. They are stock specific. And actually this year I've been unprofitable. I haven't done as well as I've done in the past, but it's early into the year. It's been a little bit hard for me because, when the market does sell off, the price of options increases, the volatility increases, and then when the market rallies, a lot of that volatility gets sucked out. So I'm long Bristol Myers, some March upside calls. I'm long MET March upside calls. CNW is one I added to actually yesterday, which is a retail play. But I have about 30 stocks that I'm net long.
So are you stronger, maybe perhaps more on the consumer end of things? I'm just trying to get a feel because as we go forward here, everybody kind of seems to be going with the macro view. If something comes out of Greece, let's just buy the SPOOs. If a company just lightly beats on earnings or they release on the correct day, let's buy the company. Do you see strength coming into things such as consumer spending? Do you think consumers are going to be taking out more credit, and that's kind of why you're getting into a Conway and some of these other names that you have? Do you see people going out to spend capital now?
Yeah, I mean, it's the story of 2015 is going to be different. Like Apple is the ultimate buy on any dip, and I think funds want to get into Apple. I do not have a position right now in Alibaba, but I think Alibaba is a great value down here. People were loving it at 105, and now at 85, no one wants to touch it. I think funds want to own Alibaba, and I think it's great growth and a great company. I don't have a position, like I said. Like I said, the way that I trade is a little bit more unique than anybody. The market sells off. I don't necessarily buy the S&P. I don't buy the XLY, I think, which is a consumer ETF. I just buy what I find institutional order flow in. So today, whatever I find institutional order flow in, I'll buy it. I had a huge monster position in Alcoa. Lasted for about 2 weeks. I took my profits and then I hit it for the house. Every trade I have, every position I have is a trade. I'm happy to get out of it when I hit profits. I had a monster position in staples. I sold 80% of my staples when it ran up the first day and it was up 10%, and then it sold back off the next day. So I'm in and out of positions very, very quickly, but I'll see what happens in the institutional order flow on a daily basis.
All right, excellent. Well, Andrew, thank you. I appreciate you coming on. Folks, we've been talking with Andrew Keene, founder of Keene on the Market, clearly a disciplined trader who's been around operating KeeneOnTheMarket.com since 2011 after previously being a proprietary trader over at the CBOE. Andrew, thank you very much for coming on. I wish you luck this year, man. Do well, okay?
Thank you.
Thank
All
you.
right, thanks.